Everyone, welcome back to Fast Stock Market News, where I'll give you all the news as fast as I can. So we see today was a very choppy day in the stock market. Ultimately, all three indices, including the Russell, finished in the green, but it was not without its volatility. As we can see, the S&P 500 finished up 0.48%, Dow finished up 0.2%, Nasdaq finished 0.22%. And the Russell, actually the biggest performer of the day, finishing up 0.85%. So what's causing all this volatility today? Well, there's a couple of things. As we can see on the calendars, actually just what the remaining earnings are for this week. We could see we still have AMD and Airbnb that just reported right now after the closing bell, reported great quarters. Airbnb, since it's a big holding when it comes to travel and reopening, they reported a nice quarter, a lot of pent-up demand, and people are ready to travel again. So that'll bode well for all the travel stocks, such as the airlines and the Carnival Cruise stocks and whatnot. But we still have a few more companies that will be reporting later this week, so you guys can take a screenshot and be on the lookout. Marriott's another one good for travel. You have Uber as well. You got Twilio, more speculative trades, e-commerce, Shopify. You can look at Block for fintech. Fintech will move as well, like Open Door, another one of those like stocks that are kind of like working from home kind of stocks, and as well as more speculative plays like DraftKings. So you guys can mark these on your calendar and just be on the lookout. But one of the big things I want you guys to keep out on the lookout for tomorrow will be the FOMC monetary policy decision. It's a very important thing to mark on your calendar, guys, because the market will be violently moving in one direction or another. And a lot of people it's not posted anywhere, but I want you guys to mark this down on your calendar. That the meeting will be released at 11 a.m. Pacific Standard Time or 2 p.m. Eastern Standard Time. So be on the lookout at that time. If you're looking at your portfolio, expect your it to be moving up or down a whole lot. So that's something that you guys should be aware of. Another thing that I wanted to keep track of is or inform you guys about how Paul Tudor actually went on CNBC today, and he's basically completely bearish on the market. He's basically saying that he doesn't believe the stocks or bonds are even investable right now. And in fact, he actually even mentioned that if he was in charge of being the boss of the Fed, he would fire him. I mean, I think a lot of us at this point, especially seeing our portfolios go down so much, would probably agree with him. But I'm actually more on board with someone else.
I mentioned in the intro to you this call you made back in October when you were with us about what you expected to happen to especially higher valuation tech within the NASDAQ. Let's revisit that, and we can talk on the other side.
If the NASDAQ were to correct, the growth multiples were to correct to January 2020 levels, pre-COVID. In January 20, nobody thought that multiples were too low. We'd have about a 30% correction in the NASDAQ. So I think when you're looking at the distribution of probabilities, whether you're playing from home or whether you're doing this for a living, you need to leave open the possibility that as rates begin to move up, as the world normalizes, multiples are going to normalize.
I'm not sure. I mean, the shirt looks the same, although it looks like a hoodie this time. So some things change and some things stay the same. So we're down 22.5%, 22.5% from NASDAQ highs. You said 30. I mean, that's close enough. Are we done?
Well, I'll tell you, I like my beard game better from last year, too. It's hard to believe that was only October 19th that we were here at Milken and that we had that conversation. But, Scott, 22% in the NASDAQ doesn't really tell the story. The internals of the NASDAQ, the growth stocks, as you well know, are down 50 to 80%. And so we've now retraced below that 5-year average that I referenced in October. Certainly when we were talking in October, I wasn't anticipating a war in Ukraine. We weren't anticipating the concerns around hyperinflation, energy inflation, food costs that we've now seen. So we've overshot the averages. And now I think is the time that whether you're playing from home or whether you're a professional investor, you have to find opportunities to buy. It's notable that Berkshire, after having $7 billion in net sales in 2020 and 2021, has deployed over $50 billion in the first quarter of this year. They don't know, and I don't know, when the tradable bottom is in. But we do know that we're closer to it today than we were last October. And I think if you're an investor investing over a 1, 2, 3 year time horizon, find your best ideas and put money to work.
Guys, that's basically what I'm doing. I'm honestly just DCAing. I'm looking past all this volatility. I'm on Brad Gerstner's side. I honestly could care less of what the Fed's doing and tightening and whatnot. I'm just DCAing into strong conviction companies. And yeah, that's what I'm doing. But what are you guys doing? Let me know in the comment section down below. All right, guys, I hope you enjoyed the video. Take care. Thanks again, everyone, for watching Fast Stock Market News. If you enjoyed the video, consider subscribing, commenting, or liking the video. I would greatly appreciate it. My name is Gio, and I'll see you tomorrow, guys. Take care.